Good morning, ladies and gentlemen. Welcome to the Certified Financial Planner Program. My name is Miguel Pratt. I'm the Program Director, Coordinator at the Bahamas Institute of Financial Services. Glad to have you all join us for I believe, our 17th year, our 17th cohort in financial planning. We have about close to 200 persons who have been through this program who have graduated. It's one of our flagship programs here at the Institute. You know, in the Bahamas, financial services is our second industry. Actually, financial services helped carry us through the pandemic when tourism failed. So this is one of the most critical courses that we as Bahamians need to develop, especially when it comes to financial planning and wealth management. It's our bread and butter. Well, not actually our bread and butter, but let's say the butter on the bread, because tourism is the bread. Okay, but anyway, we want to welcome you all. We have a lot to cover in a very short period of time. Mr. Checkley, can you scroll down a bit for me, please, so we can go to the syllabus? Sure. Okay, our first module is the financial situation analysis, where you will be involved in analyzing the company or the person as regards their cash flows, income statements, balance sheets, so forth. And then module 2, we will deal with client relationship skills as financial planners. Communication will be critical to your clients, as you are the advisor to your clients. Module 3 deals with risk management and insurance needs. You know that there's risk in everything that we do, and there's a lot of risk when it comes to managing people's money. Then in module 4, we deal with investment products and markets, time, value of money, savings, investment products, so forth. Then module 5, we deal with legal issues in financial planning. Persons who own corporations or are wealthy will eventually end up in court. Some dissatisfied client, some breach of contract. We're not going to ask you to be lawyers, but we need you to understand how the Bahamas judiciary system works, how immigration works, residency, citizenship, and so forth, as some of your clients will be non-Bahamians. Then we go to module 6, asset value and estate planning. This is where we have the wills, all of the financial vehicles that we in the Bahamas offer, our trust, our icon investments, our smart funds. We have to deal with factor. We have to know about the tax requirements of other countries, how we report to their country, to the IRS, so forth. So ladies and gentlemen, we have a lot to cover in a very short period of time. So we encourage you to please read ahead of time. We will be doing case studies and so forth. Now, Mr. Checkley, if you could scroll back down to the schedule, sorry. Sure. Scroll back up to the schedule, yeah, sorry. We see that we're going to try our best to stay on schedule, but sometimes things do arise, circumstances unforeseen, but we would like to stay on schedule as close as possible. Our first 6 classes will be Saturday mornings, 10 to 12 noon. I believe one class in here might be at 9 a.m. to 11, but once we get to that class, I'll let you know. As our first 2 lecturers are partners, our esteemed partners in the UK. So because of the time difference, more feasible to have them on a Saturday morning. Then we switch to Thursdays, as these are our local lecturers. Now, your assessment will be based on an assignment and a final exam. Your assignment due date, as you can see, is Friday, June 3rd. You probably will be receiving your assignment at the beginning of module 4. And you'll have to upload it by Friday, June 3rd. It's a 2,000 word assignment. That assignment is worth 40% of your overall grade. And then you have a final exam, which is all multiple choice, which will be taken, hopefully, if everything stays on schedule, July 16th, 2022. That is a 80-question multiple choice exam.
On the computer.
Based on the computer, yeah. Open book. But please, folks, do not let open book mislead you. The exam and the assignment are very comprehensive, very, I would say it's very intense. Now, we do have hard copies. You should have all, first of all, you should have all received the electronic copy from modules 1 to 5. If you haven't picked up your hard copy, please go ahead. Pick up your hard copy from the office. Should be ready. Your module 6 is being evaluated right now by Ms. Christine Archer, because module 6 is the most fluid module as changes have been made. For instance, this year, we have VAT changed at 10%. So that's going to impact some of the cost material for this for module 6. And if any new legislation, because as you do know, we do have a new government in place, and usually when a new government comes in place, new policies, new legislation, new acts come out. So we will keep you abreast of that. So any changes that needs to be added to module 6 will probably be done before your exam. Yeah. Okay. What else? I said, if you need anything, please, ladies and gentlemen, I think I put my cell number in the email. You can call me anytime, as long as it's not too late. I'll be more than happy to help you with anything, or send me an email, text, WhatsApp, whatever.
Miguel, do you just want to mention the chat box, because the materials are in there for persons for this morning, if they want to, If you haven't received the link, download in the chat box is modules 1 to 5. And as I said, hopefully we have module 6 ready for you by the end of next week. Just waiting on my lecturer to ensure that everything is updated to 2022. Okay. Hopefully, does anyone have any questions for me so far? Yeah, you can either turn the mic on or send it via the chat box.
As I said, once again, I encourage you, ladies and gentlemen, to please use a laptop or a desktop for this class, as we will be interchanging documents. We will be doing case studies. You will need Microsoft Office, Word, and Excel. That is a must. You will be greatly disadvantaged on a cell phone. You will not be able to get any work done on a cell phone. You can use a cell phone unless, just in case something goes down, but we encourage you to make sure you have a desktop or a laptop with a working camera, microphone, and Microsoft Office.
So Miguel, let me just say a little bit about the background, and then you can ask persons to make their introductions.
Not a problem.
So good morning again, everyone. I do apologize, the camera's not working at the moment. We've got 2 parts out of 3 working. We had the worst storm yesterday in 30 years, and these storms regrettably are becoming more frequent. We had 4 terrible storms in the last 2 months, and they're all coming, out of the Atlantic seaboard, as you've probably seen on various television news channels. So we first came to the Caribbean actually as long ago as 1989. So if you do a quick bit of maths, you'll see that's actually just slightly more than 30 years ago, and came to Bahamas in the 1990s, and we were making occasional workshops, which in those days, of course, was live. There was no Zoom, no Skype, nothing like that. And we would be using, paper and pen and flip charts and things like that. Then the milestone event was in 2004 when our associate group from the UK, we signed an MOU with Bahamas Institute to endeavour to bring in executive style programs, of which you're currently experiencing one of them. That was in 2004. And then I believe, and Miguel will keep me right on this, it was either 2005 or 2007 when we had the first financial planner program, and that was out of Goodman Bay Corporate Centre. And Miguel still has a picture of that in various press books that he has there. And it's proved a very, very important topic. It's important, in each and every country, and particularly important for Nassau, as a centre which is perceived globally in terms of wealth management and financial issues. So it's a very, very important topic area. And the programme, I'm pleased to say, is run every year since. And we've also got programmes such as the Certified International Risk Manager, the Certified Credit Professional. We've also got more recently Credit Skills Academy for persons who prefer, a total self-study route of an academy. And we're launching again quite soon the Wealth Manager program, which again we're hoping is going to be successful. Now, Miguel's already mentioned this, but I'll just mention it again because it will give us underpinning for modules 1 and 2. So if you want to make a note right now, some of the key areas that we need to look at, whether we're dealing with a person or a business, will be the balance sheet position. So that could be a personal balance sheet or a business balance sheet. And we need to understand our way around that. Then we also need to look, at what the income is, whether again it's personal income or it's a business income, where maybe the person has been running quite a successful large company, possibly American, coming in to you for advice. So again, we need to find our way around the business income statements. And then, as Miguel mentioned, the very important area of cash flow. And one of my books from many years ago for the Financial Times, Pittman Publishing, some of you might have seen it, it was called Cash is King, and that was translated into Italian and Spanish. And it is still today, of course, a very, very important topic to each and every one of us, whether it's personal cash flow or business cash flow, it's going to be a critical aspect. Then the fourth really important area, when we've got these foundation steps in place, will be to work with the clients in developing some type of financial plan. And the financial plan will be very, very important indeed, because it will set out a possible route on the way forward that needs to fit in with the client, with the client's risk appetite. So we'll be doing a lot of work on this as the program progresses. So back over to Miguel just for the moment, and he'll mention the link with the Chartered Banker Institute, which is the oldest banking institute in the world, and they're the people in the UK who have a global reach now, and they are the people who actually accredit the program and will issue you with the final certificate when you graduate. So back to Miguel just for the introductions. Thank you.
Thank you, Mr. Checkley. So, ladies and gentlemen, what we want to do is have you guys go ahead and introduce yourself, just a brief, where you work, what you hope to accomplish from a certified financial planner, so forth. So what we could start off with is if you could start off with Ms. Wilchcomb.
Hi.
Hi, how you doing? Morning.
I'm good.
Good.
So my name is Shakira Wilchcomb Farquharson, and I work at SuperValue head office in the accounts department. and my goal is to become certified in the financial planning area to help, I guess more growth in our business, in our company, and in fact, for myself personally too, with my finances moving forward. But
excellent. Yeah.
Glad to be in this class, and I hope I get to learn a lot more. I have a bachelor's degree in accounting, and I chose to do this particular study instead of the CPA for some other reasons. But yeah, I hope to accomplish my certification at the end of the course.
Yeah. Okay, well, that's great. And if we get stuck, Miguel, on any of the accounting issues, we'll call on you to help us out with your accounting hat on. Thank you.
Thank you.
Great. Okay, can we move on to Ms. Newton?
Good morning, everyone. Thank you, Miguel. My name is Kayleen Newton. I hail from Grand Bahama. I work for DePuch and Turnquest Law Firm. I'm the accountant here.
Right.
I'm also a certified forensic accountant. And I actually already, I'm a certified financial educator. And so I just see this as a next step for me in moving from private, working for someone else into full-time entrepreneurship for myself. And so I look forward to completing this certification so that I can move to the next steps with my goals. So it's a pleasure to be here this morning.
Well, thank you very much. Pleasure to have you. And again, a very interesting background, and you'll find the program, will build on your technical background and give you more aspects of, of what's happening globally and in the areas of wealth management and financial planning. So welcome, yes, thank you.
All right, great. Well, Mr. Checkley, you need to be on your P's and Q's when it comes to your cash flow, because you have
we got some star people so far.
Two accountants who will audit you. So, all right.
Well, you'd better watch out as well, Miguel, because the lady said she's a forensic accountant.
Exactly.
So she'll be on your trail.
All right. Thanks, Kayleen.
Thank you.
We go on to Ms. Smith, Danica Smith.
Hi, good morning, everyone.
Morning.
My name is Danica Smith. I work at Commonwealth Bank, and I just decided to do this course because I've always had an interest in financial planning. So when I saw the course available on Facebook, I was like, okay, it's time to get certified. So that's why I signed up.
Excellent. Well done. Yeah.
Okay, can we go to Mr. Pierre?
Good morning, everyone.
Morning.
Morning.
My name is Ernst Pierre. I've been in banking for about 10 years now. I currently work at Fidelity Bank.
Right.
And I'm actually extremely excited to be here. Financial planning has always been a passion for me. So in this instance, I'm excited to actually finally, work my way in getting certified. I've done some. I always say to myself and my clients, I religiously study financial coaches like Dave Ramsey and things of that nature. So for me to be actually going into it and getting certified, I'm extremely excited to do it. So that's me.
That's great, Ernst. Yes, the international accreditation, by the Chartered Banker Institute, it's a very powerful certification to have, and also, it's globally recognized. The Chartered Bank Institute has more than 30,000 members globally, so there's over 100 countries where you have networking opportunities going forward. So yeah, great to have you on board, Ernst. Thank you.
Okay, thanks, Ernest. We have Miss, I think it's Shanika Ferguson, correct?
Yes.
Great, thanks.
Morning, I work for the Bahamas government in administration and management position.
All right.
And I always had an interest in dealing with money and finances. So I decided to take this course as a challenge for myself, to see if I can possibly assist the government in the area, and also in case I want to branch out on my own to start my own business.
Yeah, excellent, excellent. Yeah, we have had one of our financial planners going on in the zone. I don't know if anybody's familiar with Nathaniel Benby. He has his own company now called Druba Solutions, and he has a good clientele base. So yeah, a few folks have gone on their own, and they're now working for themselves.
Wasn't he in one of our very early classes? Was he actually the Goodman Bay class?
No, he was not Goodman Bay. He was at the class just before we moved from Market Street.
Oh, right, yeah.
Yeah, I think he has a staff of 3 or 4 now working with him. So
excellent.
So he's done very well in
That's
financial planning.
Yeah.
Yeah. So we have Katura Wilson. Good morning, Miss Wilson. You have a little bit of challenges with your mic, probably.
If you have a problem, just send a quick message in the chat box. That'll be fine.
Okay. All right. Yeah. She probably had some problems with her mic. Can we move on to? Sorry, I'm just going on the list here. Lewis. Leticia Lewis.
Yes, my name is Leticia Lewis. Currently working at Scotiabank as a senior financial analyst. I was having a discussion with a friend and she mentioned this course. So I kind of went on the website and took a look and it piqued my interest. So here I am.
Welcome. We've had a lot of people over the years from Scotiabank participating. That's very nice.
Great.
Right, that's right.
Thanks. Can we go on to Ms. Maud Smith?
Good morning, everyone. My name is Maud Smith. I too am a banker. I've been in banking for almost 10 years. And once people know that you're a banker, you find that they come to you for advice on what to do with their money.
Yeah.
I in fact love telling people what to do with their money when it comes to accomplishing goals or whatever project or task they may have. So I have actually been trying to catch this class since last year. And for some reason, I kept missing the deadline. So I was able to catch it this, and I am excited about becoming certified in an area that I am passionate about.
Excellent. That's really good to know, Maud. Yeah, welcome to the program.
Thank you.
Okay, I think we have, did we do Ms. Nikita Smith?
Good morning, all.
Morning.
My name is Nikita Smith. I currently work at Providence Advisors in the investments area as the supervisor of securities.
Right.
In taking this course is to eventually I would like to move more on the portfolio management side.
Yes.
And this course will definitely give me the skills and confidence needed to excel in that area. So I'm looking forward to it.
Yeah, thank you. And you'll see we do have a good sections on portfolio management, which should help you with your personal goals. Yeah, welcome.
Thank you.
Welcome. Okay, I think last but not least, Ms. Tamar Roberts.
Good morning, everyone.
Hey.
Good morning. Hi, my name is Tamar Roberts. I am an employee of First Caribbean International. I'm currently in Abaco. I've been in banking for 17 years, currently in business banking. And most of those years, because of my experience, I must say that customers really value the input and the blueprint you give them to achieving financial success. So achieving this accreditation would really put me in a position where I can add more value to my client experience, be it either at work and outside of work, and also my personal life. So I'm happy to be here to achieve this certification.
Excellent. Thank you, Tamara. Thank you. I've actually been to Abaco a couple of times, but it's quite a long time since I was there. Yeah. All I can remember is staying in a very nice hotel, which was right on the edge of the beach. So that was a lovely location. I'm sure Miguel would be very jealous.
It's still a beautiful place. Yes.
Yeah. Thank you.
All right. Yes. Thank you, ladies and gentlemen. I guess, Mr. Checkley, I'll go ahead and let you take it over from here. Thanks.
Okay, well, thanks. Yes, and welcome again to everyone, and thank you for the introductions, because it does help. It helps us, you know, with some of the background of what your goals are and what you're hoping to get from the program. So what we're starting with this morning is the financial situation analysis, which hopefully you can see on the screen there. And as Miguel mentioned, if you're having difficulty accessing the material electronically, if you go into the chat box, you'll see he's put in the chat box a compressed file which you can download, and it only takes a few seconds to download it. So we'll make the assumption that everybody is okay. If not, put a message in the chat box to Miguel, and he'll help you, you know, on the technical side. So part one, we'll be looking primarily at the personal clients to begin with, and then when we move into part two, we'll move into the slightly more complicated area where we need to have a better understanding of the business that we're looking at, because it may be, you know, the source of drawings, the source of earnings, or the source of a dividend, you know, from a large company. So we really need to be comfortable finding our way around the business situations. So starting today, we're going to begin with, as you can see, the objectives are to know your customer, and KYC. KYC is very, very important in the Caribbean in terms of anti-money laundering issues as well. You'll see most of the thrust is towards actually knowing your customer, which is easy for me to write down. It's only 3 words, easy to say, but of course in practice, as you well know, it's jolly difficult to actually know your customer. And is the customer, you know, the person that you really think they actually are? So we'll be spending quite a bit of time in trying to understand the various structured approaches we could take to actually come to grips there. And there's 1 or 2 templates that we've used on this program for quite a while that have proven very popular and help you to take the structured approach, because you'll know yourselves in interviews, persons are very, very different, you know, whether it's a telephone interview or nowadays on Zoom or whatever, or face-to-face. Interviews can be quite difficult, which is why we have client relationship skills in module 2 that we'll be studying these various aspects. And then we'll need to have good skills to actually analyze the information that we're getting and respond to a variety of different financial scenarios. You know, you'll find people that you meet will be in very, very different financial positions, and they'll all be expecting from you, you know, some good ideas to try and assist them with their financial plan. Lots of people you meet won't even have a financial plan. You know, they might have some sort of ideas what they think they might like to do, but actually to commit it to a type of financial plan will be very, very important. We also need the ability to be able to construct the personal financial profile of the client. And I've mentioned this already, you know, this will be the technical issues of extracting a personal balance sheet. And we've got at least 2 accountants in the group who will be able to keep us on the straight and narrow with that if we get into difficulties. And then looking at their income position, and then the very important aspects of the cash flow. And over the last 2 years, with this dreadful COVID situation that we've all been encountering. I mean, the cash flow of everyone, whether you're personal or businesses, have been quite dire. It's been very, very difficult indeed, whichever country you're actually residing in. And I think one of the few companies that's really benefited have actually been Zoom. So I wish I've had a chance to have been an initial investor in Zoom all those years ago. So Miguel and I started the trail for the educational aspects. We started with an American company that Miguel located called Instant Presenter, and that was a very good system to begin with. Then it kind of lost its way a bit, and we moved over to Skype, which was very good in the beginning, and then it kind of deteriorated, and more recently has improved again. And then, of course, Zoom came on the scene, which lots of people tend to use. Then once we've got this sound base, we can then move forward to looking at how we can do some forecasting. And of course, some people are very, I wouldn't say frightened is the wrong word, apprehensive is probably a better word, about trying to make forecasts. Some people are very cynical and they say, well, there's no point because forecasts are always wrong. Well, you know, that can be quite true, of course, but unless we try to forecast, you know, we're really moving in the dark. We need to have some type of forecast to help us move forward, whether it's a personal situation or a business. And then, as mentioned in some of your introductions, how can we help, you know, with the monitoring and the control of these investments within the aspect of portfolio management? So that would be a very, very important area for you. And then some of you already mentioning being a banker. Well, some of the case studies we look at, there will be debt involved. So we'll be looking at, you know, whether the persons can service the debt that they have. And if not, are there any ways in which we can make suggestions to help them manage their debt profile? So some general principles to start us off. So what we'd be expecting to achieve will be good analysis techniques. And that will be quite hard, but you know, we've got all these 6 modules to assist us, and it's gone successfully for quite a number of years, as I've been mentioning. So what we need to start with is a logical approach. And quite often, and this program once again shows it, quite often we have a lot more ladies who are participating than men. And I think ladies tend to be proud of themselves that they tend to take probably a more logical approach than we would. Now, I'm not going to categorize Ernst into this box, but I think Miguel and I would confess, you know, that we're not the best at the logical approaches. We're probably better around, you know, at Senior Frogs having a couple of beers, but I haven't been to Bahamas for quite a long time. So what we need to start with is a good logical approach. So what you'll find throughout the program, and this is true of all our certified programs, they are practical programs. So you should straight away, you know, be able to take some of these issues into your workplace or into your personal life and use them. So yes, we'll be drawing on some academic models that are quite well known where they will assist us, but the whole thrust of all of these programs is they're meant to be extremely practical, and our track record tends to achieve that. So we need to improve your ability to be able to interpret financial information, and that's quite tricky because it will come in various different formats. And then the other side, which we tend to call the non-financial information, and that's a more difficult area because it's more subjective. So those persons who are accountants will, of course, tend to call this quantitative and qualitative. So quantitative will be, you know, the hard material financial facts that we can get, And then the qualitative aspects will be the other side. And some people call this the gray side of analysis. So it is quite a difficult area. Sorry, I should say, just interrupt me anytime you have a question, or you can put it in the chat box, and hopefully we'll pick it up as we go along. Then the next point, of course, is to build our capacity to be able to draw conclusions. So we're going to get a lot of information together. There'll be areas where we still need more information, and again, we'll have a template for this, where we look at the information that we've got, and then we make lists of further information that we actually want to assist us with these conclusions. And then the skill to draw together a number of these individual factors, and then the ability to balance them and reach some type of overall decision on the financial situation of the client that we're dealing with. So it's quite a tricky route. Interesting. You'll meet all sorts of different people. Interesting. You'll have all sorts of discussions and ideas, what they may or may not do. And then at the end of the day, we need to apply our ability where we're making good judgment and good common sense throughout the process. So, if you have a person who's extremely cautious, it's no use coming up with a whole list of high risk investments, because within their portfolio management, they're not going to be interested in that. So we have to make this analysis to find out, the type of person that we're dealing with. So starting with the framework, whether we're dealing with a person in employment or a director in a business situation, the following framework will help us focus on an approach to the assessment. All the points are important, and the fifth point is a key issue, certainly in knowing your client. Now, because we're on Zoom and because we're online and not in a face-to-face situation, what we'll try to do is we'll run through to the hour, which will be 11 o'clock your time, and then we'll just take a short 5-minute comfort break and carry on after that. So, client analysis, here's a framework for the financial situation analysis to get us started. Here's some essential requirements. How much is the total income, and what is the source? So that's very important. Where is the money coming from? Is it a reliable source? Is it a regular source? Is it, a regular source? So we're trying to get more background here. And what's being done with the money, whatever type of income stream these people have? Are they making investments currently, or are they just managing to service the debts that they have? Are they in like a standstill position? Do they currently have any plans for investment and repayment of debts? And looking over our shoulder, what will be the client's position if the plans go wrong? So we need to build in some risk mitigation where we can. And Miguel mentioned, I think it's module 3, where you'll have risk management, insurance, and looking at risk aspects of the person that we're dealing with. And then point 5, very, very important. What is the work experience and financial track record of the client? Now that's very, very important indeed to us as financial planners. What's their experience in terms of where they've been working? Have they been in one company a long, long time, or have they been running a business a long time? Or are they sort of newcomers to these things? Or, they're starting off a new business and they've come along to you with some advice for business startup situations. And again, we'll have quite a lot of work on that within this module, and also within module 2, looking at the relationship skills, which can be quite difficult in terms of business startups. Business startups, we all want to support them, because small businesses, one day we all hope they'll become larger businesses. Some people don't want to do that. They just want to have a small business that runs successfully and makes them a reasonable income. Other people that you'll meet, they might say, well, I've got a business plan, here it is. It's a 5-year business plan. And by year 5, I want my business to be listed on the stock exchange. So, you know, you're going to be looking at something totally different than some persons who are looking extremely ambitious with that type of plan. And, you know, what's happened in the past? What's their financial track record? Why have they come to you? Have they come to you because their expectation is that they know about you and their expectation is you're going to be able to help them? Or are they coming to you because they've been to maybe, you know, 2 or 3 other financial institutes and they haven't achieved what they wish to with those institutions? So again, very, very important analysis here. So just throwing it open for a moment, anyone had a particular experience that they'd like to mention in terms of point 5 there, the bullet on point 5, the work experience and the financial track record of the client. So switch the mic on if you'd like to speak, or just stick a chat box entry. So I know I've taken you a bit by surprise, but there we are. Anyone got a comment on that? Point number 5, the work experience and the track record of the client?
Hi, I'd like to share a story.
Good, thank you, Maud. Very pleased you've come on.
Yes. So the bank that I work for, we offer financial coaching for customers and non-customers.
Right.
And early on in my career, I had a non-customer at that time who was simply seeking to borrow money from the bank. She did not qualify at that time. However, we did conduct financial coaching sessions. To cut a long story short, she is now a customer of the bank. She is now able to qualify to borrow money. And one of her goals were to start a small business. Yes. And she is doing that, and she's successful at that. So the work experience was just to see the end goal. The customer understood her goals, and at the end of the period, she had accomplished most of them.
Well, that's an excellent story. Yes, I mean, that's just the sort of thing we want to achieve, that you're starting with someone in a position where, you know, they don't have much of a track record, but what they do have is a determination, I suspect, from the story that you've given us, to succeed. And, you know, whatever position they're in, that's very, very important. And many, many years ago, I met a lady who was a very successful banker, and we were talking about, you know, how she'd started in the bank, and she actually didn't start as a professional employee. She started as a cleaner in the bank, and each day when she was, you know, finishing cleaning the bank, she would talk to the manager in the branch and say, you know, I'd really like to learn a bit more about banking. And you could see that she was keen on this, and gradually she got more and more involved. And the end of the story is very, very sweet, because in the end, she became one of the most senior bank managers of this particular bank.
Wow,
and that's a Caribbean story for you, from cleaner in the bank to one of the senior bank managers. So yes, thanks for that, Maud. And yeah, we can help. And when you help people, it's surprising what can actually happen as things progress. So thank you for that. Now, I mentioned this a little bit earlier. Helpful if we have some type of what we used to call aide memoir, you know, which is after the French word, something to support our memory. And there's been significant developments in this over many, many years. And the first one, some of you may have heard of from a long time ago, and that was called the 3 C's. You can see just towards the end of the first paragraph there, The 3 C's go back a long, long time, probably over 50 years, and they stood for the character of the person. You know, can we identify what the character of the person is? The capital, and what sort of capital do they currently have? And capability in terms of things like servicing of liabilities and the capability for making investments. So that one stood the test of time, and it's still used by many investment houses today in lots of different countries and in banks as well. People still talk about the 3 C's. Now, there are others. There's a business one called PASA, which we'll look at in a later unit. But then there's a very, very popular one, which some of you may well have heard of, Campari. And Campari is proven very, very popular in situations where we're looking at a personal client. And in a moment, we'll give you a template for this. And to bring things more to life, we'll have a case study where we'll look at and we'll try and we will incorporate, I shouldn't say try, we will incorporate the Campari approach on the particular case that we'll be looking at. So that will be a personal client case study. There are others. There's this other one, SAS, which Mike Hill likes. Mike will be doing module 2 with you. He's an extremely experienced banker going back, many, many years, and he's worked in lots of different countries in the world on the training side. And you'll find he's very approachable, very helpful to you. And he likes this one, the stability of the person. What sort of attributes do they have? And what about serviceability and security? So stability, how likely is the client to disappear? So that's a terrible starting point, but is it someone who's lived in the same place quite regularly? One of my stories from a long time ago, the first place we actually went in the Caribbean was Jamaica, and that was in 1989. And I'll never forget, there were 3 of us went there to run 3 different programs. I was doing credit with a treasury program, and I can't quite remember what the third, yes, it was trade finance. And on my credit program, as we were drawing close as the first week, there was a lady on the program. She said to me, "Oh, Keith, I've heard that you're traveling from Kingston up to Ocho Rios at the weekend." And I said, "Well, that's right. Ocho Rios is up on the coast, a very pretty area where they have Dunn's waterfalls." And one of the managers on the program, he'd offered to take the 3 of us up to Ocho Rios so we could see a different part of Jamaica apart from Kingston, the capital. And she said, "What I'd like you to do is when you're going up to Ocho Rios, can you look out for a property for me?" So I thought, gosh, this lady must be, wanting to make an investment. And we were talking about it. She said, no, it's not an investment. She said, "What's happened is my client has disappeared." And I said, "Well, there's over a million people in Jamaica. How do you expect me to find your client?" She said, "No, it's the house. I'm looking for the house." So what had happened apparently is the bank had financed this house, but it was one of these portable style houses. And this guy who was having problems in servicing the loan, a friend of his had a lorry and a crane, and it craned the property onto the back of the lorry, and the property that disappeared out of Kingston somewhere towards Ocho Rios. So I'm afraid that's a bit of a frivolous story, but it fits in with the stability aspect there. I hope we haven't had experiences like that in Nassau or in Freeport or in Abaco. So we'll just start to look at this and we'll just take a 5-minute break. So finding out the facts. So what we're going to be doing is trying our best to extract lots of information, either during the interview or by telephone or from the client's file, if they're existing. And what we're going to be looking for is to extract the information in a way that will help us develop 2 of the key documents we've been talking about, which is the personal balance sheet and a budget planner, which will revolve around the income statement, if you want to make a note of that. Now, a lot of you will have forms which are similar to this. You know, what's the background to the customer? What's the marital status? Any dependents? What income have they got? Do they have assets at the moment in terms of real estate? What's the equity position? Do they have any shares in businesses? Do they have any other assets? Do they have any investment plans at the moment? What's the liabilities in terms of a housing mortgage or loans or credit cards? Now, my experience has been, and I'm sure yours is similar, that people are quite happy talking about their income and their assets, but generally they're a bit more reluctant to actually reveal to you the liability side. Anyone got a comment on that? Has that been your experience with interviewing clients? That they're more forthcoming to talk about assets than liabilities?
Yes, in my experience as a lender, they're more forthcoming, and for the most part, they overstate their assets.
Yes.
When you talk about their liabilities, you know, they're shy to talk about it.
Yeah, and if they do talk, they tend to understate, don't they? Yeah, so they try to overstate their assets. Thank you, Ernst. And they're shy to talk about, or reluctant to talk about, the liabilities, which is still difficult right across the Caribbean region, because, you know, there's been talk for years and years about establishing proper, you know, credit bureaus, credit reference bureaus, where you could do searches on people, such as we can do here in the UK. But to the best of my knowledge, despite all of these years going by, there still isn't an effective credit bureau. Is that correct, Ernst? Do you know of any recent ones? Credit reference bureaus? Putting you on the spot here.
Yes, the credit bureau is now on stream. We're just trying to get it acclimated with our process. So it's coming, where clients won't be able to hide their liability. So it's going to be more fluent,
yes,
as a means of assessing credit.
Yes. Well, that should help, because there'll be data, there'll be a record, which is what we currently have in the UK. Experian is probably the best well-known one. And you can check your own credit rating actually with these credit bureaus. And sometimes they'll give you a bit of a shock that you won't want to see what it actually is, but it is meant to be a good data reference source. Okay, well, we're just about on the hour, so let's just take a 5-minute break where you can stretch your legs or make a quick drink, and then we'll reconvene at 5 minutes past the hour. So I'll just mute my microphone for the moment. Thank you.
Yes, great. Yeah, sounds good.
Okay, Miguel.
Yes, yes, good. Yeah, we can go ahead and resume. Thanks.
Thank you. Okay, so we started to talk about extracting the financial information, and you'll have probably your own worksheets for this. So we're just offering these as additional information to you. What's the present banking facilities? Do they have any debt? What was the purpose of the debt? And then we'll be looking for the sources of repayment. Is that by way of a salary? Is it drawings? Or is it dividends? And then looking at the disposable income, we'll look at the budget planner shortly. And is there any safety margin? And we can look at various formulas as we progress through the 6 months program at looking at debt servicing aspects and investment income strategies in terms of the interest margins that will be achieved, and things like investment planning, looking on a discounted cash flow basis where it's appropriate. So to assist us, we can use some checklists. What information can we get for the budget? Bank account details, any standing orders, credits to the account, dividends, debit and credit turnover aspects, track record, as Ernst was mentioning, the previous statements. Is there any credit references that we can get? Pleased to learn of the developing agency aspect, and credit cards, personal details, bank records, personal identification we will need, and the employment details. Do we need employee references, details of bank accounts, details of assets that they currently have? So all of this will help us put together the financial picture that we're aiming to achieve. And here we're illustrating what we're calling a personal balance sheet. Now I'm on tricky water here because I know we've got at least one lady accountant in the room, sorry, not in the room, on Zoom, and one forensic accountant, but hopefully they'll agree with me that balance sheets, basically, they are a list of assets and a list of liabilities at one particular moment in time. And the idea is that the assets should exceed the liabilities, and what will strike is a balance between the two. Now, this is applicable to a person, and Miguel and I often joke about doing our own personal balance sheet, and you can do your own personal balance sheet, and you list the assets that you have to get what you could call total owned there. So that's your assets position. Then you list your liabilities, what you are actually owing, and then hopefully your assets will exceed your liabilities and will have a balancing figure, which I like to call a personal net worth. Now, it's quite good to use the term net worth, because when we move to looking at businesses are more complicated. But whether it's, the John Bull shop in Bay Street, if it's still there, or it's, the Atlantis group of hotels, Kurtzner group, which would be obviously more complicated, or it's someone, like the biggest retailer in the US, Walmart. At the end of the day, although, some of the terms will be more complicated and the figures will obviously vary dramatically, it's still the underlying principle. The balance sheet is the balance sheet, which is a list of assets, a list of liabilities, and what we're looking for is the net worth position. So when we look at the businesses, we'll call it business net worth. When we look at persons, we'll call it the personal net worth. Now, the idea for us all in a personal capacity would be that each year, if we struck this on an annual basis, or if you wish, you could do it on a quarterly basis, or in fact, you could do it on a monthly basis. You could do it as frequently or infrequently as you like. But the idea would be to try and improve our personal net worth position through good management of our liabilities and good management of the assets and the investments that we're making. Now, oh, if only it was as easy as that, because life isn't like that, is it? You know, that might be our goal, but there's lots of things will affect what we're trying to achieve. And then we might be doing, really, really well. And then suddenly, who could ever have foreseen COVID, which has wrecked lots of businesses and devastated lots of personal lives. So the goal is to improve our net worth position. Anyone got a comment on that? Because that's a very important first document. Maybe the ladies on the accounting side could add something to this. Anyone want to say something? No comments on the balance sheet? Okay, well, we will progress. So these forms are detailed and will take time to fill in. The business interests are more complicated, and we'll deal with it later in the situation analysis part 2. Now, the additional data, as we said earlier, I said there's the balance sheet, there's the income statement, and the cash flow. So the budget planner really revolves around some type of income statement, and we'll look at business income statements in part 2, but for the moment we're thinking of individual clients. So what's their monthly expenditure, in way of the mortgage if they're an owner, or rent if they're renting, and all these various things need estimating down there to give a total estimated monthly expenses, and then what's their monthly income, and hopefully there's a surplus per month. In some cases, unfortunately, there's not going to be, and that's where we'll be tested initially as the financial planners. What ideas can we come up with to try and maybe help them manage their expenses or look at alternative sources of income? Difficult to do, but this is what we need to achieve. Other additional information, are there any pension contributions taking place within their employment? Do they make any voluntary pension contributions? And what about details of credit commitments? Now, I mentioned earlier the mnemonic Campari, and that's what we're going to look at on our first case study, because I've been talking and talking and talking. It's time to do a bit of action, and that will help break it up and also help us start thinking as potential financial planners. So Campari, what does Campari stand for? Well, the C stands for the character of the person. Are they a person of integrity and honesty? Gosh, that's easy for me to write down, easy to say, very difficult to try and ascertain. What's the stability factors, resources, etc. The first A standing for their ability in terms, of their professional, their present job, their qualifications and experience. Margin, if this was in a debt situation, we'd be looking at the interest rates being paid. If it's an investment situation, what interest rates are being achieved and received, commissions and fees payable or receivable. what's the purpose of what we're actually looking at, the actual case that we're looking at? The amount of the commitments reasonable and correct in terms of the purpose, and is there a percentage that the client can contribute to investments or investments relative to the debt profile? Then R stands for repayment, very, very important aspect. Is there any financial flexibility in terms of the repayment? What are the sources of repayment? Are there any other sources if we come into a risk situation? And I stands for insurance. Are there any insurances that are being held in terms of investments? If it's a debt profile that we're looking at, is there any security, any covenants to financial institutions, maybe by way of a property being held as security or collateral? You might prefer the term collateral, or in terms of maybe a guarantee of some type. So that's the Campari framework very quickly. So here is the first template that I'd like you to use on the case study that we're going to be looking at. So if you've got such a thing as a piece of paper at home or the office there, just sketch this out, CIFP down the left-hand side. And we're going to look at the case study and see what information we can pull out, and are there other areas of information that we actually require. So what we need to do now is to keep that in mind there, and I need to fast forward to the first of the case studies. So you'll have to hang on while I do that. And if you can look into your study, case studies, which come after financial situation 2. So I'm going right through here. The PDF pages are numbered, so with a bit of luck, yours will match mine. So there's James the Grocer, we're not looking at that yet. Andrews, Jane Brown, Douglas. Here's the one that we want, John Edwards. So we're going to look at the John Edwards case study. Okay, has everybody managed to find this, John Edwards case study?
The case study should be, okay, yeah, it should be like almost at the end of module 1, before module 2. Just so just scroll down till you see it.
Yeah, in the PDF, it's page 53 out of 325. So that's an approximate location for you. It's quite a way in. Okay, we haven't had any feedback on difficulties, so I'll assume that you've all managed to find it. If not, send us a message. Okay, so it's our first case study, John Edwards. So John Edwards has been a client for 5 years with 2 young children not yet at school. For most of the time, he's operated a satisfactory bank account with occasional overdrafts before receipt of his salary. However, the last few months have witnessed an increased tendency in the overdraft, which is now standing at $950 just before receipt of his monthly salary credit, which is usually $1,350. Edwards calls to see you in response to letters that have been written by the bank. He admits to having some financial difficulties. His monthly standing orders amount to $800, and the bank has not paid his building society, that's the mortgage holder, standing order for 3 months. He's $900 in arrears. These other bills totaling $300 to pay, and his car, which he needs for work, requires repairs costing another $150. He's close to his limit on his credit cards. He tells you that his problem started a year ago when he moved house and increased his mortgage payments by $150. This, together with expenditure on the new house, has caused deterioration in his finances. Fortunately, he's about to be promoted, which should increase his monthly salary by $150. Now, what we're going to see here is some options. And this is what we're going to discuss, as you extract the Campari framework. So option number one is he tells you that he's going to ask his bank to give him a loan of $2,500 to enable him to clear his overdraft, his mortgage arrears, and to pay outstanding bills. And he's going to offer to repay this loan at $100 per month, inclusive of interest. So that's one option for us to consider discussing with him as financial planners. The next option, option number two, is as an alternative, he will ask the bank to consider taking over debts he has to finance companies totaling $3,000 and paying off his credit card balance. Now, that is in addition to the requested figures on option one. So this will give him a total loan requirement of $7,000 as opposed to the $2,500 requested in option one. And this would reduce his monthly commitments by $300, and he would aim to repay this loan over 5 years. And he's also considering giving the bank a second mortgage over his house, which he says has an equity of $30,000. Now, what we need to do is consider his situation, and then we'll discuss with the reasons, the sort of response that you would want to make. So I'm not going to fast forward all the way back to the Campari framework, but you've got that. So you need to start off by thinking about his character, and then move on, to the A, the M, the P, the A, the R, and the I. And I'll give you, a few minutes to have a look at this individually. On some of the case studies, we'll actually put you into discussion groups, but for the purpose of this morning session, we'll just ask you to look at this yourself, and then we can have an open discussion on comments. So let me give you, say, 10 minutes to start to have a think about this, and that will take us through to 37 past, and then we'll start to talk about it. So I'll mute my microphone for the moment. Okay, well, let's make a start on our first case study, John Edwards, and using the Campari framework to start us off. So under C, for the character of Mr. Edwards, we know he's been applying for 5 years, and most of the time he had a satisfactory bank account, but recently things have changed. Anyone want to start us off with a comment under the character aspect on the case study? Would someone like to speak?
In the character aspect,
Yes.
I found that Mr. Edwards is honest about his financial difficulties.
Right.
And honest that he's struggling to make financial commitments.
Yes.
Due to a change in his, I guess I would say his debt.
Circumstances, yeah.
His circumstances, right.
Yeah.
It doesn't say much about his age.
No.
And his health condition.
Yeah. Is that Maud? Is it Maud speaking?
No, this is Wolfstrom, Shakira.
Oh, sorry, Shakira. Sorry. It came on the wrong box.
Sorry, and Eddie has a mortgage that I think he moved, and I guess he has a higher mortgage debt.
Yeah.
Yeah. Like I said, based on circumstances. And he had, like you said, the bank account. He's been a client at the bank for at least 5 years.
5 years, yes. Mm-hmm. So do we think that it's something that's been caused sort of genuinely, or do you think he's just let things go, or what sort of view do you have on that?
I think I think based on circumstances, I don't think he put himself in that situation. I think due to circumstances.
Yeah, very good. Yeah, see, I also have the box where we've got certain information, but then remember on that Campari framework chart, I gave you the template. There's another series of boxes there which says the information needed. So to try and verify what you've just been starting to conclude there, is there any other information that particularly springs to mind that you'd want?
Yeah, I have the other bill section that they didn't stipulate like would contributed to the other bills that I guess he's in arrears with, the $300.
Yeah, $300. We need more information there.
Yeah.
Yeah, that's a very good start, Shakira. Thank you. Anyone else want to come in on this, on something else? We know that he's got a property, and we know he says the equity is $30,000, but just to prompt the discussion, anyone want to know more on that aspect?
I'd like to turn in, just looking at it. Go ahead, Ernst.
Okay, I was about to say that it made mention that he's married with 2 young children.
Good.
I would like to know, what does his wife do? Is she working as well or not?
Excellent. Yeah, I wrote on my piece of paper here, Mrs. E ? Because we don't know, do we? We don't know the ages of the children, although we know the young. But I mean, are they starting school quite soon? Does she work, or is she just at home looking after the children? Which I shouldn't say just at home looking after the children, because that can be a big enough task for anybody. So don't get me wrong on that, ladies. It wasn't a sexist comment. But yeah, as Ernst said, is she working? If not, maybe she's going to return to work, when the children are at school. So we don't know about Mrs. Edwards. We need to find out much more about Mrs. Edwards. And another important point would be, is Mrs. Edwards a party to the financial difficulties that Mr. Edwards is running into? You know, does she actually know about that? You know, she might not. She might just think everything's going along quite nicely. Okay.
Basically, if he's the sole breadwinner, because she might have a huge trust fund somewhere. She's off of. You know, we never know. It's just
you never know. Yeah, Katira, that's a very good point. Yeah. Yeah, I mean, she might have, in the UK, we call it a nest egg. I don't know what you would call it. Probably the same. She might have savings, you know, from working before that we don't know about. So, yeah, so there's a lot of, so there's quite a bit of information in the case study brief, but there's a lot of information that's actually missing. Yeah, there's a lot more. I mean, the property, you know, we're told, he says, there's an equity position of 30,000 in the property, but what's the value of the property?
Exactly.
Yeah. You know, I mean, is the property worth, say, $200,000 and there's a mortgage of 170,000, or is the property worth, you know, $70,000 and there's a mortgage of 40,000? We don't know. We need to find out, again, for his personal balance sheet, what the property would be worth. Now, just for a moment, skipping to the 2 A's. I mean, the first A is about, you know, his profession and his work, where we can see that he's going to be promoted in his job. So that's good. So he must be doing a good job to get this offer. We'd need verification of that. And he's going to get a salary increase, which would need verification of. So that's good. But if we move to the other A, which is the amount. So we've got 2 options here, which are worth exploring the amount. So if you bear with me here and try and follow this through. So option 1, where he said he's going to ask the bank to give him a loan of $2,500. So let's just check that out. So this is to clear his overdraft. So I'm writing down the overdraft figure is $950. That's from the first paragraph there. His mortgage arrears, that's in the second paragraph there. 3 months mortgage arrears, that's $900. So I've got 950, I've got $900. Clear his outstanding bills, that's $300, plus the work on his car at $150. So that's another $300 and $150. So adding those together, I make that a total of $2,300 for option 1, the amount, yeah? Shakira, you would agree there?
You said, how much you said you got?
2,300.
I got 2,150, 2,150. What I miss?
Well, you missed the 150 for the car.
Oh,
car
yeah. Okay, yes.
Yeah.
Okay. Yeah.
Excellent. So 2,3, so that falls within the 2,5. So the amount calculation looks okay. So let's look at option 2. Option 2, you're going to start with the same figures that you have already. So this time you've got to carry forward a total of $2,300. And then on top of that, you've got to add the finance company debts of $3,000 and his credit card balance, which is in the paragraph up there, 1,500. Yeah. So I've got 2,300 plus 3,000 plus 1,500. I make that $6,800. Yeah. So the amount falls within the loan request of $7,000. So the amount looks fine. But the question is, which option do you think he should go for? Option 1 or option 2? Now, on one of the previous courses, there was a third option proposed, which I don't think was a very nice one, but a certain gentleman suggested, well, he's got himself into this mess. The third option is just to tell him to sort himself out. So, yeah, so we're going to try and be a little bit more constructive than that. But I mean, of course, that is always a position you could adopt, yeah? You could say, no, no, you've got to sort it out yourself. So what do you think? Do you think option one is a good option, or do you think option two is preferred, where it's more of a consolidation approach?
So
I'm thinking option two.
option two, based on the facts. Sorry.
Was that Maud or Colleen?
That was Kayleen, both of us.
Yeah.
Both of you, right? Both
Yes.
on the same wavelength?
Yes.
Yes.
Excellent, excellent. Yeah, well, option two, but would be good, and it's going to reduce his commitment payments.
Right.
But that's more of a financial commitment overall, isn't it? The loan requirement is $7,000.
My thought is, because the first option would increase his payment by $100. So he already has a challenge paying what he has to deal with now.
Exactly.
And then to add an additional 100 would now even net out the increase in the salary. You have the disposable $50 left.
Yes.
Whereas with the second alternative, he has the ability to pay off everything he owes and reduce his commitment by $300. But my thing would be to take the credit card from him so that he wouldn't now add more debt to whatever he has.
Yeah, that's excellent. So what we're now moving into was, if we went for this sort of bigger bailout position, where he's clearing things off, that's when we start to think, well, if that happened, what sort of things need to be put in place going forward? So one of those things would be the monitoring of the situation, like you say, and possibility of taking his credit cards away. So if this happened, would you want to meet him again quite soon, or would you give him like a few months to try and sort himself out?
Well, I think that the check-in would be probably monthly.
Yeah.
And not wait until, because if you look at the situation, got to the point that it got to because a year had passed. And so he would probably need more,
nursing along, monitoring, focus.
Monitoring and focus.
Monitoring, definitely. Yeah, well, we'll have a section on monitoring and control a bit later, but not later today, but within the sessions. But yes, definitely. So timescales will be very important, and again, this will be discussed a lot under module 2, the relationship skills, because part of your relationship skill will be, with some situations, you're going to need to put the monitoring in a bit more frequently than with others. And I would agree with you wholeheartedly that, because it's been drifting, particularly if we go for the 7,000 recommendation of option 2, the monitoring would need to be stepped up and to be much more frequent in the beginning, to make sure that things are going according to plan. Because the last thing we want is in 3 or 4 months' time, he comes along again and says, well, sorry, things have not been working out. I need another, $2,000, $3,000, $4,000 sort of thing. So we've got to get a lot more detail on this case. We need to find out, as Ernst was saying, a lot more about Mrs. Edwards and what her intentions are. We need to find out, about the value of the property, what the mortgage is, what the value of the property is. And we need to find out more about the plans of the possibility of Mrs. Edwards returning to work, and in fact, if she has any savings available already. So very quickly, that was a start for us on the Edwards case. Now, we've only got like 10 minutes more today, but I'd like to look just very quickly at one other case study with you, which I think you'll find is a much quicker decision. And if you go just back in the pack of information there, just a few pages, you'll find there's a case called Jane Brown, and we're going to have a quick look at this just before we close for today. So this is different. Jane Brown is a sales representative, 35 years old, worked for a current employment, etc., etc. Her salary varies with commission, and she's coming in to see you. She's in process of getting divorced. They've got no children, but she's going to receive $30,000 in the settlement. She's been living with a new partner, Mr. Jack Martin, who she intends to marry as soon as her divorce is complete. Martin owns the flat. Now, what they want to do is to use the divorce settlement money to buy 6 months timeshare in a property on a new development in Florida. The timeshare will cost $60,000, provided they can complete the purchase quickly. They're asking you, therefore, if they should borrow $60,000 immediately, from which $30,000 could be repaid from the divorce settlement, and then the residual loan could be paid over 10 years from renting out the timeshare when they're not using it, and they're willing to give you a mortgage or the bank a mortgage over the timeshare as security. So I'll give you just a few minutes to have a think about that, and then we'll have an instant discussion. But what do you think about this idea? And if you've got an instant view, you can just tell us right now if you want, because we've only got 6 minutes or so to run.
I say no.
Yeah. Come on, Maud.
Negative. Because they are.
And Colleen as well. Yeah. Why?
There's
So
so
why?
many red flags.
Right. So what's the risks in this?
Well, the first thing is with her salary,
Yeah.
she's been regularly taking bank overdrafts in anticipation of receipts.
Yes.
And so that raised something that made it curious for me, you know, how she's managing her money.
At the moment, yes.
She hasn't received it yet, but she's already spending it.
Yeah, so what we need straight away would, before we could even consider this timeshare idea, would be we need a budget planner from her. We need to go through, see what her income is, what's her expenses, and why, as you say, from that first paragraph, is she drifting? She can't manage the way things are now. Okay, so that's a good starting point. Now, what about this concept of, you know, buying this timeshare and the bank lending her $60,000?
But we don't.
And it's tricky because, I mean, timeshare, it seems like it could pay for basically. Can you hear me? I'm sorry.
I can hear you now, yes, thank you.
Yeah, it seems like the idea of the timeshare, even though she's in some financial constraints, it seems like the idea of the timeshare, it seems like the timeshare can pay for itself, basically, and the time she's not using it as being, so it's a stream of income.
Yeah.
Because it can be rented out.
Yeah.
It's almost like having an Airbnb. It could basically pay for itself.
Okay, anyone have a totally different view to Katura on that?
So I have a different view on that.
Yeah.
Okay.
Yeah.
I feel as if her appetite for risk exceeds her income and budget level.
Yes.
I think for the most part, she has to factor in the risk of what if the timeshare doesn't make any money? Can she then afford the mortgage?
Well, I'll give you another point. Can the timeshare actually be rented out? You know, so we don't know the timeshare documentation. Could it be rented out? And if so, for what sort of amount? We don't have any figures on that. So Katura, we're not like picking on you. I mean, it looks quite a good idea initially, but there's a lot more we'd have to find out.
But what about Jack? What's his contribution?
Yeah, exactly. What about Mr. Martin? We don't know anything about him. So Jack, he must be quite a nice guy because he's met Mrs. Brown and she's going to get $30,000. You know, they're living together and he's going to get a timeshare as well. Goodness me, things have changed Things have changed for his fortune.
Well, they're going to get married, so he's inheriting that debt as well.
Yeah,
So
as well, yeah.
be
So
a part of it. So
yeah,
I'm
we'll be
sure
part-
they have a plan. We need to talk further with them.
We do need to talk further with them. Very good point. And also, you know, the $60,000 that says of which 30,000 will be repaid from the divorce settlement. Now, what do we know about divorce settlements? Anybody?
Even though it's put into writing, they have a decree.
Yeah.
The actual winding up of assets and distributions don't happen immediately. So
Exactly.
to rely on that, not knowing.
So,
when
Colleen,
she
Colleen, are you a forensic accountant? Forgive me if I've forgotten.
Yes, I am, but
Yes,
I work in
yeah.
a law firm.
Oh, well, there you are. Yeah. So you've got experience of this. Yes, the 30,000 might have been agreed, but when is it going to be actually paid? You know, is it going to be soon? Is it going to be next year? Or is it going to be a couple of years by things get all sorted out? So we can't take that as a definite, you know, quick injection of money. So we need a lot more information. We need to discuss things with them both. And the good starting point, I think, would be, as suggested earlier, is we would like to start with looking at a situation as it is now, you know, working through a budget planner with her. So that would be quite a helpful start. You know, then we could move to this suggestion, and the answer has got to be for the moment, well, you know, we're sorry because, you know, we can't commit to that at the moment until we're really sure when you're going to get the $30,000. And even then, we need a lot more information about the timeshare. Will it be a good idea to actually do that? What would be the rental incomes? Can you rent it out? Have you checked that it's legally possible to rent it? And also, the final point there, they're willing to give you a mortgage over the timeshare. Again, I'd be asking Colleen, you know, as a lawyer, is it possible that they can actually give a mortgage over the timeshare? I'm not a timeshare expert, but my
not in the Bahamas.
Yeah, exactly. But my opinion would be probably not, because the timeshare is what it is. It's a share of time in occupying a property that's owned by somebody else.
You have to have full ownership. Yeah,
so you don't get ownership. Somebody else, it could be a management company, property company, or whatever, will own it. As a timeshare purchaser, I think what I'm restricted to is certain times of the year where I can go to the property. So you know, overall, it looks a bit risky. The second part, and this financial planner is a good start, would be to try and help Jane, you know, with her current situation. And if she gets the $30,000, we'll come and see us again and we'll have a chat. You know, it might be much better for her to generate, as Katura was suggesting, some more income, but this might not be the timeshare. It might be investment income from, you know, some investment products where the 30,000 could be put in to generate additional income to help her out with her budget. Is that okay for everybody?
Yeah.
Yeah. So I know we've gone very fast on that, but the Edwards case needs more information. We try and help them. Probably option 2 is the best, but it'd have to be closely monitored. Jane Brown, don't like it at the moment. We need to get closer to her current position, and then when will she get the $30,000? And I think that would be a subsequent interview situation where we'd look at it with her more carefully, you know, when we've got to know her a bit better. And also, as you said, we know nothing about Mr. Martin. You know, what sort of job has he got? He owns the flat in which they're living. What's the flat worth? Is there a mortgage on the flat? Yeah, we don't know that either, do we? Okay, right, well, you can go back to your sunshine in Bahamas and I can look out the window again. Oh, it's actually stopped raining, goodness me. And I could just see a glimmer of sunshine. So you sent it our way across to the UK. Thank you very much indeed. It's traveled 5,000 miles to get here, but there we are. Okay, Miguel, are we still there? We're ready to close off for today. Let's hope he's still there. Okay, so what we'll do next week.
Sorry,
is,
folks. Yeah, sorry.
Okay. Yeah, Miguel, we're just about ready to close. So we looked at, it's okay, we looked at Edwards and Jane Brown, and then we'll progress through the remaining personal section, and then we'll move into looking at the situation analysis part 2, where it gets a little bit trickier because we start to talk, about business situations. But you'll be pleased to know they did really, really well on both case studies, and in particular on the Jane Brown case study, which I think you remember yourself about the timeshare situation. Okay, thanks, Miguel. Thanks for hosting it. Technically, it seemed to go okay, apart from the fact I can't get my camera to go, but hopefully I'll get over the storm damage and get it going next week.
Sorry. So, okay, so we're all set then. We're all good.
Yep.
All right, then. Thanks, buddy. All right.
Okay, thanks, everybody.
Okay, thank you. Bye.
Thank you. Bye.
Thank
See
you. Have a good
Thank you so
afternoon.
much.
Thanks. Yeah, thanks for the really good contributions. Thank you.
Good day, everyone.
Good afternoon.
Thank you. Bye for now.